Third attempt. Sorry, I keep getting people knocking at the door and interruptions. So rather than a clean chart, I've got you a chart here with all the stuff that I'd used to analyse the price movement this morning. Not the moving averages, I don't have them on there, but I was just describing using them why I took the trade based on this candle as opposed to the candle that the alert told me I should have gone. Let's get rid of all that. So first off, the reason I had the white line there is because we can connect two higher highs, uh, higher high, higher low, higher high. So we know we've got trend in place, and I put that there to just um, explain to you what would be an easy way of just telling you which way you should be looking to take the trade. We can clearly do connect the lower highs here, lower high, lower high, lower low, lower low. So we know categorically this is a textbook Martin Pring trend reversal. He says a trend is a new trend is in place when you've broken the last lower high with a new trend, and you can clearly see we have here low high higher low higher high. We come back and we've even tested that high as old resistance because it's pushed the new lower low below the low of the previous low. So that's a lower high in the swing up. This is the lower low, and the break of that lower high is low, and that means that is valid resistance. Much the same as he would consider that as a valid resistance, and as such I do too. And you can clearly see prices hit that resistance there, reacted to it, and then finally pushed up through it. So I know it looks a bit messy now, but that's trying to describe to you the method. Now, of course, we could go to the H1, and clearly the first chart I look at is H1 to see what the alert is telling us, and it's saying we should be going long. I generally like my alerts to be nearer my 6 a.m, but once I've done the new analysis, then I can clearly see what's going on. Everything H4 is telling us we should only be looking really for longs or very, very short-term shorts on the 5-minute and 1-minute chart, really. M30, that had a double alert, the alert down, and then the alert up, which is telling us the 3 moving averages crossed over the 10 moving average. That was much closer to my time of day trading, so I was happy about that. Expect a pullback after we've had an alert, which is clearly what we can see is happening there. Bearing in mind I start at 6:15, as you know if you've watched any of the other videos. Like clockwork, the alarm goes off, I get up and then study the chart, have a look at a couple of others, UJ and EJ, see what they're telling me. Hopefully they should be in alignment with the other two pairs, as it were, all doing a similar thing against the yen. And then just a question of waiting for the trigger. Well, you can clearly see the trigger was late, and I've explained this. It's something to do with software, but I don't really use this alert in my trading. I'm candle analysis, but I've put it on here just to, or should I say, I don't 100% use it. It's great. I use it for the analysis, but then I drill down into the candles so I can see what's happening. And basically, as long as this candle is closed above the moving average, in this instance the 10 moving average, which is what we talk about, the 3/10, that's what this alert is, then I'm not worried about an arrow. It's just a visual aid. You don't need to be sort of anal about the waiting for the cross, or should I say waiting for the alert rather. The cross definitely, because that's telling you you've broken some sort of resistance. Well, we can clearly see these two red candles, strong resistance, price has broken through it, and that's the trigger to go. I've put the moving averages on here to show you what I mean by that. In fact, we don't need the white one, the what I use as the white one for the 3, we can have the 10 MA. We'll do that in blue, and you can clearly see prices closed over that. For some reason it hasn't actually alerted us to that, but it should have done, and that's the entry for the trade. So there's a good 50 pip move up there. I took about 18 out of it, I think, net of spread, and another day, another dollar. So what can I say? You know, it is like Groundhog Day. I know it's flippant, but there's a lot of reasons that I like to be in at this point in the market. I've explained it before, but I'll explain it again. It's because the big boys have just got into work, as it were. They've got to make their bonuses, and that's when, historically, due to the sort of amount of hours I've been watching this, that's when the best moves happen. If you'd have got in a trade here, look what's happened for the last 2-3 hours or whatever it is. Must be 2.5 hours. Just nothing. There's nothing worse than being in a trade like that. They're obviously just waiting for. It's now nearly 1 o'clock in the morning. They're waiting in the afternoon, rather midday. They're waiting for the American guys to get in and then decide what they're going to do. Now, at this point, this could go anywhere. You know, we're a long way from the ascending trend line here, so it could easily pull back for a good 30 pips and then continue. So so I wouldn't want to really be, well, I don't like trading the American session anyway, but because I don't like it, as I said, I just like that session there. So the early morning session. So that's an explanation of today's trade. A little bit more meat on the bone as recorded, as referring to the trends and the analysis, but all in all, a really, really nice setup, which is why I wanted to make the video of it, to be honest with you. So there you are. Thank you for watching, and have a good day.